Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report so exciting it's like finding out your favorite stock just split, but hold on, because it might also be like finding out your pizza order got delivered to the wrong house. We'll decode the Clifford Capital Partners Fund semi-annual report. What secrets does it hold? Let's find out. This report gives us a peek into how the fund performed over the last 6 months from October to March. We'll look at what they invested in, how much it cost to run the fund, and whether it made any money for its shareholders. Get ready for a ride through the numbers. If you want to understand the hidden world of these reports, make sure to hit that like button. We also have a Discord community linked in the description below. It's all about understanding more about these reports. Make sure to hit that like button. We also have a Discord community linked in the description below. It's all about understanding more about these reports. First things first, this is a semi-annual report covering October to March of 2025. It contains key details about the Clifford Capital Partners Fund. If you want more info, there's a website listed to cliffordcap.com/partners fund institutional /. Also, they have a phone number listed here that you can dial. How much did it cost to run this fund? Let's break down the expenses. For the institutional class, if you had a $10,000 investment, it would have cost you about $45 for the 6-month period. That's a might analyze. That means if you stay invested for a year, you can expect to pay roughly 0.90% to the fund's operators. What kind of companies did the fund invest in? They spread their money across different sectors or areas of the economy. Healthcare got the biggest slice of the pie with 18.63% of the fund's money, followed by financials at 16.65% and consumer staples. Things people buy all the time at 12.67%. Communication services was close at 12.62%. Let's check out the fund's top holdings. Kenvue Inc., Johnson & Johnson and 3M are some of the big names in their portfolio. These are some of the biggest brand name companies in the world. The advisor also likes Dolby Laboratories and Solventum. Now for some key fund stats. The fund's total net assets, or the value of everything the fund owns minus its liabilities, was about 119.5 million advisory fees to the people managing the money. And their portfolio turnover rate was 28.75%. That means they sold and replaced almost 29% of their investments in the last 6 months. Here's a similar report about the investor class shares, again covering October to March of 2025. You can get more information about this fund and these shares at cliffordcap.com/partners fundinvestor/portons fundinvestor/. For the investor class, the costs were a bit higher. A $10,000 investment would have cost you $58 or 115% annualized. Higher expenses eat into your returns, so it's good to know what you're paying. The sector breakdown is the same as with the institutional class. They still invested most of their funds in the same sectors: healthcare, financials, and consumer staples. Again, top 10 holdings were consistent with the other classes. Fund statistics are identical to other classes as well. Now let's cover the super institutional class shares, which also covers the same reporting period. You can get more info about this super institutional class on their website at cliffordcap.com/partners fund super institutional /. For this super institutional class, a $10,000 investment would have cost you about $41,000 or 0.82% annualized, the cheapest so far. The fund still invested heavily in the same sectors: healthcare, financials, and consumer staples. You guessed it, the same top 10 holdings as the other classes. This is an indication that the investment choices are similar across all share classes. The main fund statistics are still the same, making the different class of shares look almost the same investment-wise. Let's look at the more detailed schedule of investments of the whole fund to really see what the advisor is betting on. Vodafone Group PLC ADR, Walt Disney and Warner Brothers Discovery make up their media exposure, while eBay and Nike are the more interesting consumer discretionaries. Let's keep looking. Digging into the assets and liabilities, we can see some numbers about what's owed and coming. Investments at value make up almost all their assets at about $190 million. The fund had some good dividend income of over $1.3 million. However, it was met with almost $700K in expenses. Looking at the big picture, the fund's net assets decreased by about $4.3 million during this 6-month period. They had gains from operations of about $1 million, but it was offset by distributions and capital stock transactions. Now, let's dive into some financial highlights of the investor class shares. The net asset value at the beginning of the period was $19.57 N per share, and total share, and it ended at $19.48. Total return for the period was 0.74%. For the institutional class, the net asset value went from $19.80 to $19.66, with a total return of 0.82%. Finally, the super institutional class saw a net asset value change from $19.95 to $1.192%, and a total return of 0.92%. The fund values securities traded on exchanges at their last sale price. Fair value pricing may be used if market prices aren't available, as determined by the board. The fund classifies its assets based on how easy it is to see their prices on the market. The investment advisory agreement states that the advisor, Clifford Capital Partners, gets 0.75% of the fund's daily net assets as a fee. In this period, the advisor actually waived or gave up some of their fees. Now, what do I think of the Clifford Capital Partners fund based on this filing? It's a mixed bag. The investment strategy seems stable and the fund has low fees, but the returns weren't very exciting and may be a sign that the fund has to reconsider its investment thesis or to look for a more efficient way to bring returns. And while these investment holdings are safe, this also means that big and quick profits are also unlikely to come. There's always a risk of market downturns affecting the fund, but this is true for all investments. For a small investor, this might be a good fund to invest into, but for larger institutional clients, there might be better options. Alright, that's our breakdown of Clifford Capital Partners Fund's latest semi-annual filing. What's your take on these numbers? Do you think this fund is a good pick, or should investors look elsewhere? Drop your thoughts in the comments. If this analysis was valuable, hit that like button and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.